And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out.
Whoa. It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. I get nuts.
With your host, Phil Grande.
Bye. Welcome to my podcast. Thank you for joining me today. The market, as you see, the Dow got hit 700 points. And I have to laugh. Every time the Dow makes a new high, they claim, wow, this is the strongest stock market, strongest economy ever. And none of that is true. Okay, I'm going to talk about that today. And 4 stocks took the smart Dow down 700 plus points. So next time you hear someone say, oh, this is the greatest economy ever, it's all BS. So a new high in the Dow 30, which is almost every day, does not mean the economy's strong. It doesn't. It just, remember, the Dow does not measure economic strength. That's not what it does. It's just 30 stocks. It's not the economy. It means 30 stocks went up. That's really it. Now, the Dow, which they don't want you to know about, the Dow keeps making new highs because of price weighting. What are you, nuts? Not economic strength, price weighting. This is the biggest lie on financial TV, these jibber-jabbers every day. New high, the economy's strong. Okay, we got a new high. No, it isn't. Doesn't measure strength. Never has, never will. IWM measures strength. IWM, that's the most important one. IWM is small mid-cap stocks. IWM is the economy, not the Dow 30 stocks. That's why when you're trading, use the S&P. Now, IWM identifies a strong or a weak economy. It's never been wrong. In the past 25 years, it predicted every crash that we've had. Now, the reason the Dow is a bunch of BS, not only because it's just 30 stocks, but it's a bunch of BS because it ignores the small caps. What are you, nuts? Ignoring the small caps? It ignores the economy. That's what Wall Street wants to do, to make sure you ignore IWM. They very rarely talk about IWM. I talk about it almost every day with my members because it's so important. Because IWM is the market's truth serum. IWM is strong, okay? And when it is strong, it tells you the economy's strong. Now, that's what is strong. When IWM is strong, the economy's strong. You can put your hat on that, okay? That's the truth. IWM is the real economy, and it's been struggling for the past 2 years, and they keep covering it up. It's been struggling. That's why they don't want to talk about IWM. The TV jibber-jabbers don't want to know about IWM. Because it's truth serum. It tells you what's really going on in the economy. Now remember, as I said, IWM predicted the 1972 crash, the 2000 crash, 2008, 2018, 2022. All those happened in the last 25 years. The Dow ignores IWM, and ignores it on purpose, and Wall Street ignores IWM. No, don't talk to them about IWM. Don't talk to them about IWM. That's not a good thing. Because they don't want you to know it's been struggling. Now, the Dow is lousy because it ignores banks. That's right. The Dow ignores the banks, ignores energy, ignores transports, ignores utilities, and most of all, it ignores regional lenders. And IWM, that's what they do. Small lenders, small mid-cap stocks, they take care of the economy. When you drive down through your town and you see all these small businesses, that's the economy, not Tesla. Now, remember, the Dow keeps making these new highs because we are weighted, okay? Because of the weighting. It's not economic strength, but they don't want you to know that. Example, the Dow, you always hear, it's price weighted. So a $10 move in a 300 stock moves the Dow more than 5%, 5%. Okay, so in other words, a $10 move in a stock that's priced at $300, stock moves the Dow more than a 5%, okay, crash in a $50 stock. So it'll move, if you have a $50 stock, it moves at 5%. It's going to go down, it's going to move at 5%. So Dows move more than a 5% crash in a $50 stock, okay? All right, I screwed that one up. So when Home Depot jumps, or Goldman Sachs jumps, or American Express jumps, or McDonald's jumps, the Dow, and then the Dow makes a new high, even if half the market is bleeding out, this is why the Dow can hit records while IWM is in a correction, while regional banks is in a bear market. Retail is rolling over. Transports are dying. Staples are weak. Financials are spilling over. And semis are volatile. So that's the thing about IWM, okay? The Dow can hit all these new record highs, but it doesn't take in consideration what the transports are doing, what the staples are doing, what the financials and the banks are doing, or the semis. Isn't that ridiculous? So, again, breadth is terrible in the Dow. Terrible. Strong markets don't have terrible breadth. The Dow does. The Dow 30, right now, it's got terrible breadth. We have very narrow leadership. And as I said, look what happened today. Look what happened to Dow. 700, dropped 700 points because of four tech stocks. Four tech stocks took, I think it was 12 of the 30 stocks and crushed them. They're down 9%, 12%. 14%. I mean, they got really crushed hard today. So again, you've got to watch yields when you're trading. Okay? Strong economies don't panic when yields rise. That's what happened today. Yields went up today. The 10-year almost hit 5 basis points today. The 2-year hit 5.4 basis points. Yesterday, I think the 2-year was only up by 1.4 basis points, if I'm correct. And if you have a strong market, they absorb these rising yields. You don't, and you don't see these kind of corrections, 700 points. So today, okay, the market it showed how weak the market is. The market cracked under these rising yields, 10-year and the 2-year. Tech finally cracked. There's 4 stocks. They're the manufacturers, like we call them, or the factories. They make the machines that makes chips. That's what the whole market's about, is chips. They make the only machines. 4 companies make the machines that produce the chips. And they got crushed today. And if those stocks break the 200-day moving average, they're testing it right now, okay? Let me make sure I'm correct, or was it the 50-day moving average? So we got 5 stocks. ASML, yes, that's right, CLAC. They're all testing that 50-day moving average. Now, they're going to do everything they can tonight for tomorrow morning to make this market positive on the opening in the morning. They'll rig that. They always do. But and if they do, they start running these tech stocks, do not buy them unless they make new highs, because they're called snapbacks. You can get caught in these snapbacks. So the bottom line is this. You follow these 10-year yields, okay? They mean everything. So yesterday, as I said, if the economy were strong, we're talking, and I'm trying to find my yields here. If the economy, yesterday, right, the 10-year moved 4 basis points. Now, this is important. Nothing happened. Today, the 10-year moved 4.8 basis points. The 2-year moved 5.4 basis points. That's a huge deal. That's why the market dropped 700 points. Because when the yield went up that high, CLAC, AMAT, LRCX, ASML started to tank. And that's really, those 4 stocks hold up almost the whole market. Those stocks started to tank today. Because remember, they don't like high yields. And when these yields started to move higher, that's what took this. And the thing is, it took down 12 of the Dow 30 stocks. So please, don't listen to the jibber jabbers on TV. Stop listening to the Dow. Start following IWM, and you'll be a much better trader. If you know how to follow IWM, you know how to interpret the 10-year and 2-year yield, what a difference it makes with your trading. And we'll help you with that here at Phil's Gang, free for 10 days. Join our gang. See you on the charts.
Are you nuts?